also portfolio manager Vance Howard. Vance, now you've always sort of preached that investors should rely on math and not emotions, but that kind of sell-off, they ignored the math, my man. Can sometimes the market anticipate the math changing before it actually does?
Yeah. Well, we don't own IGV, but like I wrote about in the Wealth Watch, which comes out to our investors, we're looking at buying it because it's way overdone. Remember when the regional banks sold way off and they were way overdone also, and it gave the investors a great opportunity to buy some great stocks at a cheap price? I think IGV may be setting up that same sort of scenario here. You know, we look at AI and we think that everything's going to go out of business, and that's just not going to happen. What's happening with this rotation over the past 4 weeks is creating a lot of opportunity, and I think investors need to be taking advantage of it.
So, I mean, you're saying it's on your radar. What would cause you to pull the trigger? What do you need to see happen? Say, okay, we're going to start to build a position.
Well, let me go back to Microsoft, because we were talking about Microsoft also. We sold stuff yesterday. I took profits and stuff yesterday and started buying Microsoft. And look, when you talk about the Magnificent Seven, let's go ahead and rename them. They're the seven kings. They have seven kingdoms. And I mean, they are so profitable, so well run. When you get these dramatic sell-offs like Microsoft, you need to start adding to your position in each one of those Magnificent Seven or the seven kings, because they're going to game AI. They're going to save you a lot of headaches and a lot of trouble looking for the next big stock, you know, trying to find a needle in a stack of needles. If you're buying some of these huge big names, they're going to really profit from AI. And I think Microsoft is way oversold. I think IGV is way oversold, but I'll wait until it starts making higher highs and higher lows.
Okay. By the way, we're going to just, I was going to ask you about Microsoft in his interview. I wanted, since you brought it up, pull up the chart, just so folks can understand to what degree you were expressing. So there's a great chart of the drawdowns, the historic drawdowns, and, you know, how far it comes off the all-time high. Look at this, folks. We're talking about, let's just call it 30% in the blink of an eye on no real news. So I can see what made you pull the trigger there on that, you know. By the same token, we had what Workday reported after the bell last night. Oh, the number was okay, but they offered so guidance. And, you know, how concerned that you is that there will be some winners and losers in this place, that this is creative destruction right before our very eyes?
You had a guest on earlier, Eric, and I think he did a wonderful job of kind of counteracting what that gentleman wrote about the other day, which was completely negative. And to be quite honest, I think it's not going to happen. Will we see efficiencies pick up, and will we see some level of employment tick up also? And I think the answer is yes, of course we will. But I don't think it's going to be as overdone as what people think, Charles. I mean, I don't think that we're all going to sit around 5 years from now, nobody's working, nobody's doing anything. And some of these writers act like the whole world's going to shut down with AI. AI will make things more efficient, but you're also going to see things like Microsoft that are going to be able to get more efficient and become more profitable. What if 5 or 6 or 7 years from now, Charles, Microsoft's paying an 8, 9, 10% dividend?
Yeah, listen, I'm with you. They create a lot of they create opportunity, but in the heat of the battle, it is worrisome when these stocks fall completely apart. Let's talk about some other opportunities there. You like Nvidia going into the earnings tonight, right?
I do, but you know, you made a very good point, and I really agree with you. We've seen stocks go up on bad news and down on good news. And I think that could happen today with Nvidia. But Nvidia, it's been going sideways since August of last year. It's been going sideways for 6 months. I mean, this thing is like a pressure cooker. I think once it breaks out, and I think that you're going to see it really run, I think it's going to pull the rest of the Magnificent Seven or the seven kings up. And I think you're going to see it become very, very profitable. But Nvidia is making money hand over fist. These people are well managed, well run. They have very little debt, and they're making a ton of money. They're going to take advantage of AI.
You like Empower and Texas Instruments. I got less than a minute to go, but I do like these secondary semiconductor names, and including those that have reinvented themselves more than once. Because we used to know Texas Instruments for the hand calculator. Why do you like it now?
Well, that goes back to my point, Charles. I mean, when they were doing the hand calculator like 30, 40 years ago when I was in college, look at them now. They've adjusted, they've adapted to what's going on with the environment, and they've been profitable. But when you look at, MPWR, I love the cup and handle. I love the chart pattern. And this is how you've got to start trading these, Charles, is with technicals, not so much the fundamentals, because if they fall out of bed, be walking behind it with a stop and get stopped out and look for the next opportunity.
I got to tell you right now, technicals have saved people a lot more money than fundamentals have. In fact, fundamentals have driven you crazy.
Thank you.
By the way, I've sold stocks too soon because the fundamentals haven't been able to keep up with reality even. Vance, thank you so much, my friend. Appreciate it.
Hey, thank you, Charles.